Welcome back to Brashonomics. For all you jewelry lovers out there, or people who got jewelry for Valentine's Day and don't know what will happen if you lose it, guess what? You will not have to worry about that. Well, you might have to worry about it, but you won't have to not know the answer any longer in the next few minutes. Paul Pukis is back with us, owner of Mosaic Insurance Alliance and speaker and co-author with Amy Druryl of Protect Yourself. Paul, how are you, my friend?
I am doing well. Thank you very much.
How did you buy your wife jewelry for Valentine's Day? Sorry, I put you on this years ago.
I should have just answered yes.
You should have just answered yes. That's right.
Sorry, honey.
A lot of people do buy their significant other's jewelry, and I know when in the insurance game, it sometimes changes what insurance you need, doesn't it?
Yeah, it sure does. And we're at a time right now in the year where Christmas, we passed Christmas, and then Valentine's Day came, and those are the two biggest days that people get engaged. And jewelry becomes an issue on how do you insure it. You just paid a lot of money to get it, and what's the right way to take care of it? And there's a couple different answers out there in the marketplace right now. The most common is people will put the jewelry on their homeowner's policy. Or the other option is you can get a specific policy that's a standalone policy that just covers jewelry. And what I'd like to do is talk a little bit about the benefits of those and go into why one makes more sense than the other in the big scheme of things. So,
great.
Just keep going.
Yeah, let's do it. I mean, that's really what it comes down
Absolutely.
to. I mean, is understanding how different pieces of whatever your assets are, whether it's jewelry or your house, your car, how do those maybe affect something like insurance that you don't think about when you're at Tiffany's or you're at Benbridge or wherever you are. You're not thinking, man, we're going to get this and then we are going to insure it.
That's right. There's only a few times
gift that keeps on giving.
A person's life when that comes up, and typically that's when you're the parent of the new teen driver, because we get a lot of phone calls about how much is this car going to cost to insure. So that's the only time when people are worried about the cost of insurance before they get something.
Sure.
So moving back to jewelry, if you insure a piece of jewelry on your homeowner's policy, there are a couple things to be concerned about. The first is if you have a claim and it's only for the jewelry, your homeowner's rates are going to go up. And that can seem kind of counterintuitive. Well, there was nothing wrong with my home. I didn't have a pipe burst or no one broke in or I didn't have a fire or something like that. But they stole or you lost or whatever the case is, a piece of your jewelry. Well, because that was on your homeowner's policy or renter's policy or condo policy, whatever it is, your rates are going to go up. And it will happen because you had a claim on that policy. Now, if you, on the other hand, if you move that jewelry to a policy that's only for jewelry, it's a standalone policy all by itself, typically you'll find better coverage. And if you have a claim for that same item, it doesn't affect your homeowner's premium because they're two separate policies. So it's a cost. I mean, you're kind of like, it's insurance for your insurance, because if you spread them apart in that situation, you're not going to get a rate increase on your homeowner's policy if you had the piece of jewelry scheduled on your home policy, if that makes sense.
Yeah. I mean, what it really sounds like is trying to keep things in different buckets. Your jewelry insurance, your house insurance, your car insurance, which is kind of interesting and maybe a little counterintuitive because, of course, all you see on TV is package all of your insurance policies.
Right. That doesn't mean you're correct. It might be a little counterintuitive.
I watch a lot of TV, Paul.
And we've had these conversations before. But when you package the policies together, that's different than simply adding something to a policy to include it in the big scheme of things. And the homeowner's policy is the biggest one. I mean, you can schedule different things like guns, jewelry, sports memorabilia, sports equipment, your golf clubs. You might want to specifically itemize those things. But if you have a claim on that one specific item, it's going to cause your entire rate to go up instead of just focusing on that one specific item that had the issue.
Are the rates similar, though, or do they end up being a little bit more expensive?
Actually, because these companies tend to focus just on that type of asset or that type of item, the rates tend to be a little bit lower. And the nice thing about them is some of the companies we work with will actually do annual appraisals. That's built into the policy because bringing up my wife's situation, the last time that any significant jewelry was purchased was the engagement ring and the wedding band.
And you gotta step up, buddy. How long have you guys been married?
There are other things that we do. But that appraisal was 13 years ago, 12, 13 years ago, and things have changed since then. So, the cost of gold has gone through the roof. You see all the ads about, sell gold now because it's at the highest price that it's ever been. And if you're keeping your value on an old appraisal, you're not going to get what your jewelry's worth. So if you go with a company that focuses on jewelry only, they're going to take the time to appraise that every year. It doesn't cost any more. They do it in-house. It's part of the policy. And you'll know you're getting the right value for your dollar.
It sounds a lot like knowing what you're going to insure and how you're going to insure it is really what it comes down to. And in the same way that not everybody can know everything about buying a house or getting a financial plan or their health, you can't know everything about insurance and how to insure it. I mean, most people maybe go get their homeowner's policy and they say, well, do you have any other things?
Right.
And it's, yes, we have these things. We have whatever the things are.
Yeah. The question is, what other things of value do you have?
Yeah. And so I guess the difficult part for a lot of people is even people don't know what they don't know.
Right.
So
someone should be asking them the questions.
Yeah.
Yeah. And when I used to work for only one company, I didn't have these options. So that's another thing to consider. If you're working with an independent agent that can offer different companies and different products, we now have the ability to go out to the companies that focus on one specific type of niche and do very well with that. And that's a great feeling to have and a great option to give clients.
How many companies do you work with at Mosaic Insurance Alliance?
We have over 80 right now.
And so there's 80 companies with different types of policies, different costs, and that must surprise some people. Because you don't see 80 on TV.
Well, but we don't use and that's
again,
a good
where
point.
Apparently I get all of my information on.
Yeah. It all comes from the internet or TV, which is all true. Some of the companies that we represent are very focused on a certain niche, so there's no real reason for them to advertise because we do the advertising for them by being the ones that feed business there if a person that does that specific thing comes to us, or we market that way. The other thing is there are companies out there that are phenomenal companies that don't spend money on advertising. They'd rather keep their rates down and pay out more in claims than spend millions of dollars advertising to try and get clients.
Yeah, isn't that the truth?
And that sounds like a winning proposition to me if that's where the company's focused. So.
Yeah, I oftentimes wonder how much less expensive things would be if they didn't advertise on TV because I think about cars. I swear every other ad is a car ad. Mm-hmm. And I can only imagine what it's not like they're you pay for it. Mm-hmm. You pay for the ads,
It's on the MSRP.
Yeah. Advertising costs to get you to buy this car, sucker.
Yep.
That's right. Well, Paul, thanks so much for joining us. We do have to go to break. Stick around for a few minutes. We'll get some more of your opinions along with our other in-studio guests, Dr. Al and Don Rushton. We'll be right back.